I promised that I would make a video about my book and the content it contains when it is released, and I am extremely happy to announce that my book is officially available on Amazon. There is an ebook and a print book available. So today, I want to quickly discuss the content within my book so you can know if it is right for you. To put it simply, this book is great for anyone who is interested in learning more about investing and understanding more about what makes investing work. It discusses real-world examples of successful and unsuccessful investments and explains why they did and did not work. It is not another book that explains dollar cost averaging or index investing. While I believe in those topics, I do not believe that I can provide anything unique to them. So my book explains how you can analyze and identify good and bad businesses with the goal of turning you into a more educated and confident investor. So if you're interested in what makes investing work, or if you're someone who is interested in buying individual stocks, then this is a book for you. Also, thank you to everyone who has already ordered. The book is already the #1 bestseller on Amazon today in the stocks and investing category, and I cannot thank you all enough for your support. I left a link at the top of the description for anyone who is interested in checking it out or buying the book. So that's where you will be able to find it. It should also be available worldwide on Amazon now. With that being said, let's now dive into the content of the book and what you can expect to gain from it. The first 2 chapters are the wealth formula and the most important things to know about investing. These chapters are full of useful information about investing, saving money, and also discuss the perspectives investors have towards saving and investing in general. These chapters are like building the foundation of investing and make strong arguments as to why saving and investing is so important for your financial well-being. They also discuss topics such as why savings accounts are not a great place to store your money, why you need to invest to protect and build your wealth, and some key investment concepts to get you thinking like an investor. Additionally, these chapters discuss why becoming a great investor means becoming the best version of yourself, because to become a good investor means identifying your bad habits and then overcoming them. So the pursuit of becoming a successful investor is also the pursuit of becoming a better person. Then the book dives into investing concepts and metrics investors need to know, such as the price to earnings ratio, free cash flow, operating cash flow, and when specifically to use all of these different metrics. For example, on my channel, I often use the price to operating cash flow when analyzing a business, but then the price to earnings ratio when analyzing another. And the book explains exactly why I do this, and why certain ratios make more sense in certain situations. By reading this chapter, you will understand which metrics you should be focusing on in which situations as well. The next chapter, which is converting price ratios to yields, is short, but it's incredibly important. This chapter is dedicated to explaining how you can convert a price to earnings ratio into a yield, which then allows you to compare the stock against any other investment, such as bonds or even real estate. For example, if a bond has a yield of 5%, but a stock has a price to earnings ratio of 30, then which one has the higher yield and is looking like the cheaper investment? This chapter will explain how you can figure this out and why it is so important to do so. The bond yields and stock valuations chapter discusses the relationship between stock valuations and bond yields. There is a direct relationship between these two, and when one moves, so does the other. Additionally, you can tell when stocks or the entire S&P 500 is looking expensive by paying attention to this relationship. This chapter also discusses the historical relationship between these two assets and when the market is looking cheap or expensive by understanding this relationship. Single stock valuations is a chapter dedicated to understanding how to value stocks and compare their valuations against each other. Throughout this chapter, we use real-world examples and how investors such as Warren Buffett think about valuations. The next chapter is Value is Growth, Growth is Value. This is personally one of my favorite chapters because it discusses why there is no such thing as a value stock or a growth stock. At certain prices, your typical growth stock can make more sense than a value stock. But at another price, the value stock can actually yield higher returns than a growth stock. It all just depends on the price you pay for the investment. At one price, either stock could yield more or less than the other. Therefore, investors should not bucket stocks into growth or value stocks, but instead look at what each individual stock can offer at its current price. This chapter also has one of my favorite Warren Buffett quotes, which is, Market commentators and investment managers who glibly refer to growth and value styles as contrasting approaches to investment are displaying their ignorance, not their sophistication. This quote clearly explains that there is no such thing as growth or value investing, and this chapter dives deep into why that is. The next chapter is margin of safety, which is arguably the most important chapter in the entire book. The funny thing about margin of safety is that if you ask 10 different investors to describe exactly what a margin of safety is, then you will probably get 10 different answers. However, the concept of a margin of safety is well known to have come from one person, Benjamin Graham. So in this chapter, we discuss exactly what Benjamin Graham said a margin of safety is, and then use real-world examples of identifying them in the markets. This chapter also explains the pros and cons of a margin of safety, and why it is still important to use and consider anyways. It's a great chapter that will really demystify what a margin of safety is and isn't when you are investing. The next chapter is the investor's perspective on volatility. This chapter is entirely dedicated to helping you view volatility as an opportunity instead of being scared of it. Volatility is something that will occur in the markets, so if you plan on investing, then you're going to need to accept that your portfolio will go down from time to time. However, the best investors in the world do not mind this, and they actually view volatility as a good thing because it is during volatile periods that businesses become the cheapest and therefore offer their highest returns. This chapter goes through all of this and gives real-world examples of how and when volatility has created some incredible investment opportunities. After reading this chapter, you will look at volatility and falling stock prices in a completely new and different way. The History of Stock Market Opportunities chapter explains the history of the stock market and what you can expect when you are investing. One of the key takeaways from this chapter is that the market can go through periods where it produces no or negative returns for more than a decade. This is incredibly important to understand because many new investors may expect their portfolios to rise consistently every year, but that isn't how the stock market works. Therefore, if you start investing with this expectation of making money every year, then your expectations will not be aligned with reality, which can cause you to give up on investing altogether. Instead, this chapter shows you the periods where the stock market did not produce returns and why you should continue investing in the stock market regardless. In fact, you should be more eager to invest during periods where the stock market is not going up consistently. The next 3 chapters are dedicated to studying the 3 financial statements that businesses report to the public, which are the balance sheet, income statement, and cash flow statement. These chapters show you the key things to look out for when looking at these financial statements, and how you can avoid bad investments and find good ones by analyzing them. These are in-depth chapters that will show you real-world examples of businesses with strong and poor financial statements, and how you can identify them. After that, the book dives into how you make money as an investor. When you're investing in a stock, you're really investing in a business that produces and returns cash to its shareholders. This chapter dives deep on the ways businesses can effectively return cash to you, and how they create value for you as a shareholder. It also explains the pros and cons of each way, so you can better know and understand which kinds of businesses may be right for you as the investor. The next chapter is how you lose money as an investor. Again, since you're investing in real businesses when you buy stocks, it's important to understand how the business can destroy shareholder value and lose you money. It's arguably more important to know what to avoid than to know what to buy, and this chapter dives deep into real-world examples of businesses that have completely destroyed shareholder value. All of this is in an effort to get you recognizing the warning signs of poor businesses and which ones make for bad investments. Then we have the moats and why they are so important chapter. This chapter explains the different types of moats businesses can have and why it is absolutely necessary for a business to have a moat. A moat is what protects a business from its competitors and allows the business to continue growing over the long term. Therefore, having a moat helps protect your investments and lets them grow for you over time. This chapter will help you understand why moats are so important and how you can identify them. Then we have an investor's guide on inflation. This chapter discusses what inflation is, why inflation will never go away, and the best investments that protect your wealth against it. This is probably the most controversial chapter in the entire book, as inflation is a very hot topic that carries many different opinions. So in this chapter, all I can do is explain my perspective and what has worked for investors historically. Inflation is a reality that we all have to deal with. So instead of complaining about it, it's much more productive to learn how to defend against it. So that's what this chapter focuses on. Then we dive deep into what my largest loss was. I won't spoil this chapter too much, but it dives deep into my largest loss in terms of percentage and why I made the investment, what I was initially thinking, and how it went so wrong. After reading the financial statements chapters and the chapter on how you lose money as an investor, you should read this chapter and know immediately how foolish that I was being. I also write out every mistake that I made and every lesson that I learned from this experience, so you can avoid massive losses like this one within your own portfolio and learn from my mistakes. The next chapter is completely dedicated to the best business I have ever seen in the stock market. It explains why this business is so high quality, how it has managed to return over 100 times investor money, and the key things that makes it so incredible. It's a perfect chapter to have right after my largest loss, because these two contrasting examples really highlight the differences between a low quality and a high quality investment. It helps you know what to look out for and how to identify great businesses that can compound investors' money over the long term. Then we dive into a conversation about risk. This is a very interesting chapter because it's completely subjective. Therefore, this chapter is meant to be read as a conversation and not as facts. You should question the things that I discuss in this chapter and think about them for yourself. Risk is an important topic and concept to understand, but it's also extremely hard to accurately measure. So this chapter explains how I think about risk and the difficulties behind it. Then finally, we have a final note from me to you as the reader. I won't spoil this one at all, as it is kind of personal and I do think that you will enjoy it. Then we have the acknowledgements, which are thank yous to the people who have impacted my life and made me the man that I am today. Then further reading, which is a list of my favorite books on investing and life. It also shares some of the key lessons that I learned from these books and what order that I would read them in. The book is also 300 pages long and contains roughly 100 images and charts to support the text. There's a ton of great content in here, and I put my heart and soul into making it as valuable as possible for you. So that's the entire book summarized and the content that you can expect when you read it. And again, if you are interested in my book, then there will be a link at the top of the description that will allow you to easily buy it off of Amazon. But with that being said, thank you all so much for your support on my book. I cannot believe that it is already a #1 bestseller on Amazon. That is absolutely mind-blowing and it's just unreal to me. So from the bottom of my heart, thank you all so much for all of your support on my content, my channel, my book, all of it. Seriously, without you, my audience watching these videos, none of this would be possible. And none of it would be worth doing, to be quite honest with you. So it is you that gives all of my work meaning and allows me to do all of these cool things, like write a book. So again, thank you guys so much. I cannot thank you enough, and I just really hope you all enjoy the book if you do end up purchasing it. But with that being said, that is going to wrap up the video, everyone. I just really appreciate you, and I really hope to see you all again in my next video.